Gold is spiking, the ISM numbers just dropped, and history tells us Bitcoin usually follows within 30 days. Add in allegations around Fed governor's housing scandal, and Wall Street suddenly is whispering about money printing. This week's financial story isn't just about the markets, it's about the future of Bitcoin. Let's break it all down. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. This is where we cut through the noise and break down the news that actually impacts your wallet, your freedom, and your Bitcoin stack. Quick reminder, this is not financial advice. It's for education and information only. Do your own research before investing. Okay, let's get into it. The latest ISM manufacturing report came in weak again this morning, signaling contraction in the U.S. economy. Manufacturing under 50 means businesses are pulling back. Orders are slowing, and confidence, well, it's shaky. Why does that matter? Well, because historically, weak ISM numbers have forced the Fed to lean dovish. And when the Fed blinks, money printing comes back on the table. Let me explain this and how it ties to Bitcoin. Every time liquidity opens up, risk assets like Bitcoin catch a bid. Just look at 2020. When trillions were printed, Bitcoin ripped from 8,000 to 64,000. Weak ISM could be a signal that another liquidity wave is coming, and I really believe it is. And Bitcoin is the asset designed to front run that. Next, we see gold rising, and Bitcoin's usual lag behind it. It's usually about 30 days. So gold is already reacting. It's been pushing higher as investors hedge against inflation and economic weaknesses. But here's the key stat. Bitcoin historically lags 30 days on major moves. That means if gold's breakout holds, we could see Bitcoin follow suit in about a month. That's because Bitcoin isn't just digital gold, it's supercharged digital gold with global liquidity. And a hard cap at 21 million coins makes it the reason why. Smart money knows this, and the fact that gold is moving first is basically setting the stage for Bitcoin's next leg up. And at one point, I do believe we passed gold. Now, the political shocker. Home builder Bill Pulte claimed today on X they received alleged video proof that Fed Governor Lisa Cook's declared primary residence is actually being rented out to tenants. That's a big no-no, because if that's true, that's a form of housing fraud and could explain why her tenure suddenly ended for cause. Now, do a lot of people do that? They do, but it's definitely mortgage fraud if they did. Okay, here's 3 reasons why this matters for Bitcoin. Number 1, confidence in central bankers is already at an all-time low, especially with Jerome Powell. 2, if Fed officials are caught in scandals, it reinforces the idea that the system is corrupt and cannot be trusted. And number 3, the narrative strengthens that Bitcoin, as a trustless alternative, is the best thing for a monetary system with no central authority, no manipulation, and no backroom deals that you have to worry about with Fed or Congress. So to tie it all together for the Bitcoin impact, weak ISM equals Fed pressure toward easing policy, which is bullish liquidity backdrop for Bitcoin. We also have gold rising, which equals signal to investors of hedging, Bitcoin likely to follow in the next 30 days. And then we have the alleged Fed scandal. A loss of confidence in institutions make people look at Bitcoin as the safe haven. That isn't random noise. It's a perfect storm that shows why Bitcoin is the most important asset of our generation. All right, family, I want to hear from you. Do you think Bitcoin will follow gold's breakout over the next 30 days? And do scandals like the one around Lisa Cook push you closer to trusting Bitcoin over the Fed? Drop your thoughts in the comments below. And don't forget, hit that like button, subscribe, and share this with someone who needs to understand what's really happening in our financial system. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.